We just witnessed one of the biggest shakeups in the entire crypto market, a full-blown cascade, fear everywhere, charts bleeding red. But while everyone else panics, you and I are going to talk about what actually matters, the fundamentals. Because crashes don't destroy the future, they expose who's really building it. Today, we're spotlighting the utility giants, XRP, XBAR, XLM, and XDC, the ones with real-world use, not hype. So if you hold any of these, especially HBAR, don't you dare click away. Because by the end of this video, you'll realize this shakeup isn't the end. It's the beginning of something the mainstream can't see yet. The greatest reset in finance we've ever witnessed. If you're interested in this topic, hit the like button, subscribe, and type interested in the comments, and I will give you a heart. Let's be real, crypto just got smacked. Billions gone, traders crying, Telegram chats full of "it's over" memes. But here's the truth the noise won't tell you. Crashes are the reset buttons of progress. They burn the weak hands, they cleanse the leveraged gamblers, and they hand opportunities to people who actually understand what they're holding. Right now, we're sitting at around $3,750 billion, 0 cents in market cap. That's after one of the sharpest drops since FTX, Luna, and COVID combined. Yet we're still here, still building, still innovating. And while everyone screams bear market, the smart money calls it what it really is, an accumulation phase. Fear and greed index, 35. That's fear territory. The same zone every single bull run in history was born from. When everyone else loses their head, that's when foundations are built. Remember 2020's collapse? Everyone called it the end. Bitcoin at $3,000, 0 cents, altcoins forgotten, influencers vanishing overnight. And yet, those who stayed patient turned that panic into generational wealth. The same setup is happening right now, except the stakes are bigger. This time, it's not just about traders. Wall Street's here, governments are writing frameworks, Swift's testing blockchain rails. The DTCC, which literally processes quadrillions of dollars yearly, is exploring distributed ledger systems. The US isn't debating crypto anymore, it's integrating it. So why panic? Because people chase charts instead of progress. They zoom in on red candles while the world zooms out on adoption. Over the last year, XRP up 360%, HBAR up 240%, XLM up 259%, XDC up 120%. Those aren't meme numbers. That's silent, steady growth during chaos. Markets bleed, but real builders, the ones with products, partners, and use cases, they grow. Crashes don't end bull markets, they delay the headlines. What we're seeing is the biggest psychological stress test the crypto market's had in years. The market wants you exhausted. It wants you out before the real move begins. Here's where it gets interesting. While everyone's selling, institutional accumulation is happening quietly. Custodians, payment processors, and global banks are buying infrastructure. This is not the death of crypto. It's the transfer of ownership. From emotional retail to calculated enterprise, you are witnessing history. And the only question that matters right now is this: are you a short-term spectator, or are you an early shareholder in the future global system? Keep watching, because the next part explains why this boring phase is where fortunes are made. All right, let's get serious. Everyone keeps talking about utility, but let's define it. Utility means money moves faster, cheaper, safer, and more transparently. It means real-world adoption, not hype tweets. And right now, Hedera, XRP, XLM, and XDC are leading that revolution. Started with stable coins, a $293 billion 0 cents market, moving $3 trillion, $500 billion 0 cents monthly, with nearly 200 million holders. That's not a trend, that's a parallel banking system being built right under our noses. Tokenized assets exploding. We're seeing funds, real estate, and even government bonds being tokenized and settled on distributed ledgers. BlackRock, Morgan Stanley, Fidelity, these are not crypto bros. They are the architects of the current system, now quietly rebuilding it on blockchain rails. And guess what networks they're touching? XRP for liquidity, HBAR for enterprise tokenization, XLM for cross-bender microtransactions, XDC for trade finance. These aren't coins, they're infrastructure layers of the next economy. Take Hedera, for example. It's not run by influencers or random validators in their basements. It's governed by giants. Google, IBM, LG, Boeing, and more. Fortune 500 governance, carbon negative transactions, sub-second finality, and fees lower than a paperclip. That's what institutional adoption looks like. The DTCC, testing tokenization. Lloyd's and Aberdeen, settling money market funds on-chain. And Morgan Stanley, partnering with BlackRock on tokenized funds. All while retail cries about sideways movement. Do you see what's happening? The banks are rebuilding the world's financial plumbing, and Hedera sitting right in the middle of that conversation. Let's not forget, stablecoins and tokenization growth directly increase transaction volume across these networks. Every dollar tokenized needs rails to move. That's where HBAR and friends come in. It's like owning stock in the world's upcoming payment system, except it's decentralized, transparent, and programmable. Remember how the internet started? The world laughed at email. They called websites toys. Now, every transaction, business, and government runs on it. That's where blockchain is today. Early, misunderstood, inevitable. So yeah, HBAR's price might not be exciting today, but fundamentals aren't fireworks. They're fault lines. And when they move, they change everything. Now let's end this right, because the final part isn't about hope. It's about survival, positioning, and the reality of what's about to hit this market. Here's the truth no one likes to admit. Markets don't reward emotions. They reward patience and preparation. Right now, the loudest voices are the most panicked, and the quietest are the ones accumulating. You already know which group wins. 30 plus altcoin ETFs have been filed with the SEC in a single day. The ETF gateway is opening. That means traditional finance will soon have an easy button for exposure to your favorite projects. It's not if, it's when. ETFs bring legitimacy, liquidity, and a stamp of approval that retail doesn't even realize it's waiting for. Meanwhile, adoption keeps accelerating. Vanguard, managing $9.3 billion, 0 cents, is preparing crypto products. Morgan Stanley just lifted restrictions on Bitcoin and altcoin exposure. Goldman Sachs, Deutsche Bank, Citi, Barclays, UBS, they're not mocking crypto anymore, they're joining it. Even major banks are forming alliances to launch stablecoin initiatives. When you see the same names that built the old world now building on-chain, that's your confirmation. And still, retail panics because of one red week. That's how early we are. You want to know who wins? The ones who zoom out. The ones who understand that this moment right now is when conviction is tested. If you're holding HBAR, XRP, or XLM, remember, this is not about getting rich tomorrow. This is about being early to the system that will power tomorrow's money, tomorrow's banks, tomorrow's economy. So here's your real strategy. Stay patient, stay educated, and stay secure. Move your assets off exchanges. Focus on what's being built, not what's being tweeted. Because when the next rally comes, and it will, those who endured this storm will be the ones sitting on the other side with generational gain. This is not financial advice, it's common sense. Crashes fade, narratives flip, but utility never dies. So if you believe in this future, smash that like button, subscribe, and drop "I'm holding strong" in the comments, because this isn't just another market update, it's your reminder that you're early and that patience always wins. Welcome to the HBAR Millionaires Club.